may inform all other participants of said recording. Is anyone else recording the meeting this evening? Anyone? Okay, seeing none. Next on the agenda, are there comments from the public regarding items not on the agenda?
Julie, can I just ask who the iPhone person is, AdCom person?
There's somebody coming up as iPhone on this meeting.
Hey, it's Matt. Sorry.
Matt, okay.
You're you.
I'm finishing up bedtime here. I'll be on video in a second.
Fair enough. But no, you're not
Sorry.
one person. You're showing as Matt Boulay.
Oh, okay. I see now another iPhone. Anyone else?
The iPhone has to unmute.
I'm asking them to unmute, but they aren't.
They may not want to, so,
They don't have to.
right.
Okay, so as I was saying, are there comments from the public regarding items not on the agenda? Okay, seeing none. First on our agenda then is that we have the review and approval of minutes from November 16th, 2021. Nancy?
I distributed the meeting minutes yesterday. There were some minor changes made by several of our colleagues. For the most part, they were grammatical. If anybody has any questions?
Does
Nancy,
anyone have anything?
yeah, can I jump in? Nancy, there was in Dave Anderson's update, there's a sentence that looks like it's missing a couple of words or something. I don't have it open in front of me, but if you can open it up.
No, I'm looking at it right now. The school committee continues to work through their budgets. It continues to be a problem, but there continues to be a problem between, it needs a they're there. There continues to be a problem between the timing of the school budget and the strategic plan.
Yeah, that makes more sense.
Okay, I will add that. Thank you.
Okay, anyone else have anything to add? Okay, can someone give us a motion to approve the minutes from November 16th?
So moved.
Can I get a second, please?
Second.
Okay, we're doing a roll call vote. Bob?
George and Caitlin and myself left the meeting halfway through to go to the select board. So I don't know that we can vote on the minutes. They were fine with me up to the point we left.
And it was fine. Was that like 3/4 of the way through the meeting? I don't
Yeah,
know.
it was not.
It was during, it was not during anything deliberative. It was during the liaison reports. I don't know if that makes a difference. We did not deliberate on anything after that, after you left.
Well, Bob, are you uncomfortable? Are you comfortable with voting, or would you like to abstain?
I think that probably makes sense to abstain.
Okay.
Can I
George,
just,
the same way.
this is Andy, a belated change to the minutes. On my report on the planning board regarding the flood plan overlay district maps, it says which the town needs to adopt, comma, or we lose funding. I'm not sure that or we lose funding is correct.
How would you correct it?
So I would just leave it, which the town needs to adopt.
Okay.
Sorry for the
No,
late.
no problem. Thank
I
you.
meant to get back to you, but I didn't.
Okay.
I think the Robert's rules of order allow people who were not present at the meeting to actually, believe it or not, to vote on approval of minutes. I'm not sure if our rules and regulations provide otherwise. It certainly is our practice that those who are not present don't vote, but for that, for what it's worth.
Okay, so starting back in at the top, Bob, are you still abstaining?
I still think I should, yeah. I not having been
George?
there.
Abstain.
Nancy,
Aye.
Dave,
Aye.
Evan,
Aye, aye, aye.
Andy,
Aye.
Daveline,
Aye.
Brenda,
Aye.
Kristen,
Aye.
Al,
Aye.
Tina,
Aye.
Matt,
Aye.
Caitlin,
I guess I'll abstain as well.
okay. And I forgot to mention Sarah Amelia is coming to our meeting tonight, but she's just gonna be a little bit late, so. 3, 6. So I have 10, yes,
I have 10.
3 abstain.
Agreed.
Okay, great. So tonight we are beginning our budget hearings, and I want to thank our liaisons who have worked pretty quickly to get it all started and ready to go for us to kick it off tonight. And so we're gonna maybe have to do a little bob and weave at some point during the hearing tonight, because the select board is hearing some of the budgets that we are also going to hear tonight, and then also some like assessors department is also appearing before the select board for some other business. So anyway, you just have patience, but I think we'll start with human resources. Brenda, is that your budget?
Yes, it is. I'd like to introduce Lisa Campbell, who's our Director of Human Resources here in Hingham. Hi, Lisa. Thank you for coming. So as I understood it, Julie, you wanted me to, or want us to present what the request is. The request for salaries for human resources.
Sorry, Brenda, gonna just jump in. Do you want to show on the screen if Sue gives you sharing capability or not?
I don't have that ready.
Show
so,
the unit sheet.
Yeah.
Okay.
So the request for salaries, 163,742. Request for expenses, 3,200, for a total of 166,942. The increase, it's about a 9% increase in the salaries. That has to do with both employees being brought onto the new pay scale and also step increases. And expenses are down a little bit in a couple places, although there is a request for training budget of 2,000. And Lisa will explain kind of what she's hoping to offer with that money.
Thank you, Brenda.
Okay, great. At this point, does anyone have any quick questions for Brenda about the numbers, or do you want to hear from Lisa and then we'll take questions?
I vote to hear from Lisa.
Okay.
Great.
All right, let's do it.
I'm going to share my screen with the presentation that I gave to the select board. If you just bear with me for a second.
Great.
Can everybody see this? Okay.
Yes.
So the Human Resources Department manages the town's human resources functions for approximately 300 full-time and part-time non-school employees. We assist the Personnel Board in the administration of the Personnel Bylaw. We ensure compliance with all applicable labor laws and regulations, and we assist about 1,100 employees, retirees, and family members in enrolling and understanding the town's health, dental, and life insurance benefits. Benchmarks and metrics for us are managing the 6 collective bargaining agreements in town, number of staff that we hire and separate, and collecting benchmark data from our 19 comparable communities. Key initiatives for us this year are going to be to implement the new GovHR wage and classification system, manage the yearly open enrollment for benefits, maintaining the I-9 record keeping, retention, and destruction system that we implemented, designing and implementing an enhanced quarterly training program for the municipal employees, and we're looking to strengthen and diversify our recruitment practices. Our budget is primarily salary based, but we do have a small request for expenses in the amount of $3,200. The major items for that are meetings and seminars and advertising services at $800 each. We are asking for an additional amount of $2,000 to expand the training program that we've put into place quarterly. Currently, we have it in place that we collaborate with our employee assistance program, where they provide us with a handful of different trainings that are free right now through the program, but it really truly is very limited. And although we have been able to provide training such as topics like providing employee feedback, building successful teams, effective communications for managers, and tomorrow we're actually doing one for managing workplace change. We would like to bring some more quality and expand upon that, and that $2,000 will help us to do that. There's only so many times that you can repeat building a successful team to a seasoned manager and have it be impacting and valuable. So we are thinking, or we are looking to GovHR. We're thinking about topics such as sensitivity training, interviewing skills, time management, anti-harassment, wellness and ergonomics, and anything else that we come across that looks important and valuable to people, or if we get feedback that they requested. And that's the end of the presentation, so I'm happy to answer any questions that anybody has.
Good.
Andy?
Do you have a sense, Lisa, of what the impact in fiscal year 23 is going to be because of the implementation of the new GovHR wage and classification system?
I know that our salaries, the increase in our salaries is a result of that, plus the step increases.
Do you want those numbers, Andy?
No, I was wondering what the townwide impact would be.
Oh, I don't have that information. I'm sorry. We can get that for you.
Okay, that'd be fine. Just idle curiosity.
George?
Thank you, Lisa. Just a quick question. I know this is a level services budget year, but is there anything that you would like to do with your department, or anything that you have not been able to do because of staffing or other issues?
Well, just expanding the training program would be really nice to be able to do.
Okay.
We've done very well at thinking outside the box and being creative. So, we're doing the best we can with everything. But I do think that additional amount will definitely help us to provide some additional training to managers that everybody really seems to enjoy participating in and likes having that as an option. So the better quality, the more often we can do those things, investing in our staff is, fantastic.
Sure. And that's the $2,000. Is that the number, if I remember?
Correct. Yeah.
So that's all you would be asking for.
Right now, yeah, we're trying to start small. We did reduce certain areas of our budget as well to help with that impact, in supplies mostly, and in travel.
Yep.
You know, and right now, because we're starting out with this, we really don't know exactly how much to ask for. We've done a little bit of research with GovHR, who did our wage and classification system. They're able to provide us with some referrals for people to do these trainings. And I'd much rather work with someone like them who I know the quality that they're going to recommend and the quality of work that they've done,
Sure.
to make a referral instead of just choosing something blindly. They've given us, you know, from some of the research I've done, you know, trainings can really range. It can be anywhere, you know, upwards of $2,500 to, you know, something as small as $350, depending on whether it's in person and depending on whether, or, you know, or remote, or the topic, and, you know, how many people are attending, and so many different variables. So we're starting here in our request to see what we can do with that.
Okay, well, thank you very much.
Andy, you had another question?
I apologize. Brenda, what's the percentage increase in the salaries? I forgot to write it down.
9%.
9%? Okay.
Yeah, and what I want to tell you, I did email everybody over the weekend
Mhm.
that 9% really isn't 9%, because there is Article 4 money for FY '22 for the new HR Gov salary schedules. It just has not been distributed out of Article 4 yet.
So if I understand correctly, Sue, the increases that result from the adoption of the new wage and salary compensation system were anticipated, and the money was appropriated last year in Article 4, right?
Yes.
Okay.
Yes.
So the question I asked previously of how much is it overall is moot in the sense that it's already been paid for.
It's already been paid for in Article 4. Yes.
For 23.
2022.
22 rather, okay.
2023, we're going through now. So
Of course, I'm sorry, yeah, 22, okay. Thank you.
you're welcome.
Yeah, so Sue, just to jump on that really quickly, thank you for your email over the weekend. And what that amount was appropriated in Article 4 at this town meeting 21, it was $144,169, yes? Because the HR Gov adjustments were effective June 1st, 2021.
Yes.
So
Okay.
that means the
right.
salary increase percentage is will be lower than 9%.
Exactly.
Yep, thank you.
And this was an updated classification and salary plan for non-union, non-contract, permanent town employees. This was the first update to this group of staff since 2001, culminating in a 2-year review of 88 job descriptions. And the board, personnel board, worked with a consulting firm, GovHR, to evaluate each of these positions based on internal equity, comparison of roles in other towns, the experience needed related to the responsibilities given. But so there's just a little bit of a discrepancy because of 1 month, basically, right? So,
Well, it was because when we budgeted FY '22, we used the old system because it was
Yeah,
not
okay.
approved quite yet. So any difference in
okay,
pay scale went into Article 4.
okay. All right, does anyone have any questions about that topic in general? Sorry to sort of jump on the back of the HR presentation with that, but it's going to keep coming up, right?
I had a curiosity.
Andy?
Oh, sorry. I gotta raise my hand. I'm sorry. I'll go to raise my hand.
That's okay. I think Andy just left his hand up, right?
I
It's
did,
okay to go to Caitlin?
yes, please.
Okay, Caitlin, go ahead.
Sorry.
Lisa, curiosity question. How many vacant positions do we have townwide right now?
Ooh, I can check my tracker for you, Caitlin. Just give me a second. We've got several positions that we're hiring for. Sometimes that can change daily for me. Let's see. So we've got, let's see, there's the aerial bucket operator or the DPW. We've got a land use and development coordinator position for our land use and development department. We have a couple of positions for van drivers in the elder services department. We're still hiring for or looking for recording clerks for public meetings. There's a skilled labor position in the DPW tree and park, as well as one for the transfer station. And there's also a transportation coordinator through elder services. I think that, I believe that concludes them all for the moment. That's about 7, I think.
Thank you.
Okay, does anyone have any other questions for Lisa, or are we ready to hear a recommendation from Brenda?
Recommendation time.
So this is a note for Brenda, but for all the liaisons, for any budgets that you have this year where there was an additional request, right now during the hearing process, you're going to make a recommendation for what is just regular recommendation for fiscal year 23, and we're not going to make any recommendations right now on any additional requests. So you want to go ahead, Brenda?
With regards to this specific budget, if you don't have the numbers in front of you, I just want to call to your attention that Lisa Campbell was able to reduce her expenses by about $450, and therefore covers a little less than 25% of that increase that she's asking for. But okay, so recommended salaries for human resources, 163,742. Recommended expenses for human resources, 3,200, for a total of 166,942.
Okay, great. Thank you, Brenda, and thank you, Lisa.
Thank you.
So next up, we have on our agenda the treasurer collector position budget.
Right.
So we have Caitlin.
Yep, that's me. So we have Jean Montgomery here today to review the treasurer tax collector budget. I can project. You want me to project the financial?
Let me see if I can do it.
Yeah, if you don't mind. Oh, okay.
That work?
Gee,
Did that work?
Yeah. We
yeah.
Can, do you
Let's
have
see if we can get it where we want it to be.
yeah, do you have the budget sheet as well, or just the presentation?
I did not upload the budget sheet. Mine has writing all over it, but I don't know if Caitlin has it.
I can, yeah, I can share mine if
Should I get off of mine? Is mine disturbing the?
I can share you if is it Sue? Sue, can you give me access to share? Okay, great.
I think Jean has to take hers off.
I think Jean has to get off.
She does have to take it off though. So
Yeah.
can we,
Now you can start it, Caitlin.
okay, great. There we go.
Why aren't I seeing you?
Because I struggle with Macs. Sue, I'm so bad at Macs. That's all I got. And I'm gonna do this one. Okay. All right, 1 second. I'm sorry. I apparently have to grant access. but I can't figure it out. So I guess I'm just going to talk through it this time. Okay, so for the treasurer tax collector, they put forth a level service budget request for FY 2023 of $451,359. The main drivers of increase were on the salary side. There was about 26K, which was 7%, and that was driven by all of the things that Sue had just told us about. So there was the cost of living increase, as well as a reclassification to the new HR Gov rate schedule. And then there was a minor increase for longevity. On the expense side, we saw an increase of $1,138, and that was mainly driven by printing services, which is really just a 5% contract escalation clause with the vendor that we use there. And so that's kind of the high level summary, and then I'll switch it over to Jean, who can walk through some more details.
Thank you. So we have we've been asked to prepare, as you know, a short slide presentation by the town administrator to present a snapshot of our department's mission, essential functions, and our proposed budget. So we'll just kind of skim through this for you, because I believe you probably have a copy in your booklets there. Slide 1, let's see if we can get this to move. Slide 1, the Treasurer Collector's Office is somewhat unique in that it's actually 2 offices functioning as 1 department. I will pause and ask if the audio is okay on my laptop. I had a catastrophe at the selectmen's meeting, so I want to make sure you can, it's been corrected. So
Yeah,
let me
you sound
let me
great,
know if you
Jean.
can't hear me. Okay. The Treasury side of the office is responsible for cash management, debt issuance, investment, and tax lien administration. The collection side is a little more obvious to everybody. We do the printing, the mailing, and the collection of all the tax bills, as well as collection of sewer use charges. Slides 2 and 3, I'm just going to skim through those. They're packed with some fun facts and statistics of each of the offices, which I will leave to you to read at your leisure in the interest of time. We'll go to the benchmark and metrics slide. One of our key benchmarks is to end each fiscal year with 98 to 99% of the current year's real estate and personal property tax levies collected. So this particular chart on the slide is an excerpt from the town's official statement, which is the disclosure document that we create to market our debt each time we go out with a bond or a band. The fiscal year collection of real estate taxes is really a key component of the rating agency review. And it's always of interest to any of the potential bidders on our projects for our debt. So, you know, we routinely end in the 99%. We had a tiny little dip in 2020, thanks to COVID, which was really just deferred revenue, not lost revenue. We were all caught up by the first quarter of the fiscal 2021, and we're pretty much back to normal currently. Our key initiatives, I mean, things are pretty routine in the Treasurer Collector's Office. I would say the one exception would be that we are kind of on standby to work with the water company to establish a process for leaning any delinquent water accounts to the real estate tax bill. If and when the water commissioners decide that they're ready to enact this option. This was legislation that was adopted at town meeting back in 2020 when we also were purchasing the water company it's kind of an advantage that public water companies have over private water companies. So it's out there and we'll be ready to work with them when they're ready to enact it. The final slide is the summary that Caitlin just went over with you. So I don't really need to get into that, but I'd be certainly happy to field any questions you might have on your budget sheet or on the presentation.
All right, thank you, Jean. Does anyone have any questions about this budget? for Jean or for Caitlin? George?
Hi, Jean, thank you very much. Just a curiosity question. I believe when I looked at the slides, we're using something like 60 different bank accounts that have to be reconciled on a monthly basis. And I know there's some legislation that determines the number of banks that we're using, but that does seem like a large number, not only to me, but I'm assuming to you also.
It is a large number, but we have an average bank balance of $155 million. And each month we bring in revenue comes through the office of, $15 million or so. So all of those individual transactions in the office are coming from different sources. Some of those are light accounts, some of them are trust fund accounts, some of them are water accounts, and so on and so forth. Two of the bank accounts are our main depositories for all of our tax revenue. And they are also the bank accounts that we run our payroll and our vendor warrants through. So those are the major accounts with Eastern Bank and Citizens Bank. So we try not to add bank accounts, and some people think we're kind of, not very cooperative, different departments on that. We blend a lot of our revenue into the same accounts, but for purposes of reconciliation on a monthly basis, the more we can identify and isolate the different types of revenue that comes in, the better our reconciliation is with the general ledger and the town accountant's office.
Okay, all right, well, it sounds reasonable, but it just struck me as, someone who.
It is a lot. It's a lot of bank accounts, but we reconcile $155 million of revenue, or 12 to 20 million that comes in probably, well, I have staff members working on different options of it, but we tie it all together in probably a week of every month. So that's pretty good time. We try to get our reconciliation, our revenue figures up to Sue's office by the 10th day of the month, so that she can have access to those for her budget planning.
That's very impressive. Is your staff available to help me reconcile my bank? Never mind.
We get to the penny.
All George's millions coming in.
Yeah, George, I just don't believe that you don't practice good bank account hygiene. It just doesn't make any sense to me.
I'm not always to the penny, Evan.
If I'm not to the penny,
here and there,
somebody gets after me, right, Sue?
Yeah. Well, thank you, Jean.
Thank you for the question.
Andy, you have a question?
Yes, Jean, would you put up your last slide again, please? If it's not, well, I'll ask my question. The version that we have received has the expenses on the last slide at 60,958. And I think your slide reduced that by about 10,000.
Yes, the slide that you have is an early one that's been revised. The 60,000 you're looking at was a typo, and the postage figures and the printing were revised throughout the budget process. I think they may have been, I don't know where they came from, actually. I looked at them today and I said, where did that number come from? So I corrected those today. So I apologize for that.
And that's the number that actually is on the first page of the Munis operating budget.
Yes, those should match your Munis. Those were just pulled from the general ledger. So if anything's wrong, it's this slide, and the general ledger is correct.
Okay, thank you.
Good eye, Andy. All right, anyone have any other questions? Okay, so with that, Caitlin, do you want to make a recommendation for the budget?
Yeah, so I recommend for the Treasurer Collector Department a budget for FY23 of $451,359, which is comprised of salaries of $390,401, expenses of $50,958, and tax title cost of $10K.
Okay, great. Thank you, Jean, for coming to meet with us tonight, and thank you, Caitlin.
Thank you, Jean.
Thanks,
Thank you
Jean.
very much, everybody. Have a good night.
All right.
So next on our agenda, we have the assessor's budget, but as I mentioned before, the assessor's department is in the select board meeting right now doing some other business. So we're just gonna skip over them, that department for right now. And then the same would be town meeting and legal, right? Because we have to get Michelle Monsevier over here.
So guess who
So-
you're stuck with?
What's that?
So guess who you're stuck with now?
Yeah, I was just gonna say, so on deck, we have our Sue Nickerson.
We're just
Never
lucky.
stuck with Sue. Never stuck with Sue.
Oh, well,
Tonight
thanks.
is gonna be actually the night of Sue because she's got a
Oh,
lot
yeah.
to talk to us about, right? But we'll start out with the town accountant budget, which is Andy.
And you all know Sue, who needs no introduction, of course. Sue, could you put up the Article 6 operating budget page, please?
Well, I don't have that, Andy, because I didn't know we were gonna do that.
Okay, it's not necessary. I can simply read the numbers. The requested salary amount is $310,110. This is a $12,285 increase over last.
Got it.
Nice work. Wow.
Nice.
A $12,285 increase over last year's budget request, which is about 3.9%. But as Sue's email and earlier explanation indicated, that percentage is overstated because there is money available, Article 4 money, that will reduce the delta between the 22 revised budget number and the 23 department request. I note that the salary increases are not to the accountant or to the assistant town accountant, which is a new position created by the HR Gov study, and Sue filled that by a promotion, which resulted in a pay decrease. No, a pay increase of a few dollars. But in any event, that same study did result in some increases to the clerical service positions. You'll see that on page 2 of the so-called compensation worksheet. And the other point I want to bring to your attention before we leave this is the clerical services full-time is $111,840. That is a net figure. In other words, the total of the salaries actually paid would be $124,840. But because our accountant does services for SHREC, the regional emergency communication system, we get paid $12,000 by SHREC, and Sue deducts that from the salaries paid to get to the $111,840. The expenses are completely level funded at $11,355. And then Sue has a third item in her budget, which is the payment for the auditing services. Obviously, it's a contract. The fee is $75,500 this year, which is a $4,000 increase from last year. No one's happy with increases, of course, in professional fees, but we are very happy with the professional services of our auditors. So those are the three numbers that make up the total for the accountant's office of $396,965. And with that, I would ask Sue to describe for us briefly the duties and responsibilities of her office.
Okay, I just want to clarify one little thing. The wage is full-time. It is, the reason why it really didn't go up is because my staff accountant was at the top step. And when we transferred it, we upgraded it to an assistant town accountant. She started at the first step. So that's why there really isn't an increase in that. I don't know if I can, oh, can you see my presentation?
Yeah.
Wow, I can click in between. All right. The accounting office manages weekly payroll and accounts payable warrants for the town, the school, and the Shrek. We also have a retirement. The retirement office is through my office. I coordinate yearly audit for the town. I'm the liaison to the audit committee. We prepare and submit yearly, used to be the comprehensive annual financial report, but GASB has changed it. Now it is the annual comprehensive financial report, or ACFA. I guess the acronym was an offensive term to some countries, so they changed it to ACFA. We also assist in the preparation of the town's yearly budget. We submit all required forms to government agencies, and we manage the workers' comp and unemployment. These are just some of the agencies we work with: the IRS, the Department of Revenue, unemployment, PERAC for retirement. I did tell you guys that we did win our 25th consecutive award, right? Yes, I thought I did. I just want to make sure. Only 3 municipalities in the state have more than Hingham. So my key initiatives is to implement munis upgrades and improvements, as always. Train new staff. I have 2 brand new staff. One is the assistant town accountant, and the other one is the retirement administrator. Long-term capital planning. We're trying to implement additional paperless processes. Just don't look behind me because it's not working. We can review the accounting records, retention records, and we provide staff support for advisory and the audit committee. My salaries are 310, 110. That consists of 5 full-time personnel. The retirement administrator is funded by the retirement fund, so the 310 is for just the 4 full-time personnel. Expenses of 11,355. And our major items is 5,000 for conferences and training, which includes advisory people going to the MMA conference and or the associated town finance webinars that a few people have gone through. And this will come up with everybody, all the other budgets that I will be doing, but these are the list of all the other budgets under the town accountants. Does anybody have any questions? All right, back to you, Andy.
I recommend an operating budget for fiscal year 23 for the town accountant's office of $310,110 for salaries, $11,355 for expenses, and $75,500 for the auditor's fees, for a total of $396,965.
All right. Thank you.
Julie, can I just, I was trying to raise my hand, but
Oh, sorry, George.
it was too quick. I couldn't let Sue get away
Oh, God.
that quickly. And as Sue knows, and I was a former chair of the audit committee. So I was just wondering, Sue, looking at the 2020 actual audit expense compared to the 23 request, we're up about 30%. I wonder if you could provide some flavor on that.
Well, 2023 is a new contract. Actually, 22 is a new contract. Their rates just went up.
Wow. Okay.
I think due to, the CARES Act, the water, I mean, anything for the water will be billed to the enterprise fund.
Right.
But yeah, it's just the increase in a contract.
Okay. And the water would be like an additional task that they have to audit or additional work they have to do? Would
Yeah,
that be part of the reason?
21 was the first year, so they did a one-time increase, one-time billing of 10 grand, up
Okay.
to 10 grand, but the water department will be paying for that.
Gotcha. Okay, thank you.
You're welcome.
So that auditing for the water company is not part of the
No.
request? Okay. Anyone else have any questions?
Oh, and George, I'm sorry, another increase is because of the new GASB pronouncements that have come out.
Okay. Thank you.
You're welcome.
All right, well, thanks, Andy and Sue. We get to keep you for a little while longer. By the way, I think that the top of the slide should be babysitting the advisory committee and dealing with all of our problems. So thank you.
You're welcome.
All right, so we've got a whole list of other budgets that Bob Curley is going to shepherd for us. Starting with, well, Bob, you can start however you want to do it, but contributory retirement or Medicare, et cetera.
Kristen has the first budget of contributory retirement.
Oh, okay. Sorry about that. Okay.
Yep. So I just want to point out that the slot budget that everyone received is a little bit different from the one that is up on the screen right now. There was just a transposition error on the original. So the correct number is what's on the screen, the 5837513.
Do you know if the file has been replaced in the Dropbox?
It has, and I checked right before the meeting. So.
Okay, great. Thank you.
So this is the budget for the pensions for retirees. They use KMS, which is an actuary, to do these schedules. So the number is just a calculation that they do every year. So it's a pretty straightforward number. So I don't know if anyone wants to go over anything further with it.
Sue, do you have any flavor or color to add?
Actually, Kristen is 100% right. We have to do a full valuation every 2 years for retirement and for OPEB. We will be fully funded with retirement in 2035. OPEB is 2040.
OPEB isn't on this slide though, right?
No, it's a different one.
Okay, we'll get to that later. Okay,
Yeah.
got it. Okay. Does anyone have any questions or anything to add?
Hey, Sue, this is Dave. Can I ask you one quick question?
Yes, you can, Dave.
I should know this, and I didn't go back to check, but remind me when you say OPEB's or contributory retirement's fully funded in 2035, what again is the underlying rate of return estimate we have on the assets in that? Is it
7.4.
7.4. Okay, thank you.
Well, actually, with retirement, we just had our third quarter review. And I'm not sure about the fourth quarter, but the third quarter year to date, we're in the double digits.
Actual as opposed to forecast, right? Yeah.
Exactly.
Yeah. Okay, great.
Anyone else have any questions about contributory retirement? Okay, Kristen, can we have a recommendation, please?
I recommend for contributory retirement expenses in the amount of $5,837,513 for fiscal year 23.
All right, thank you. So next we have the
When's
Bob
our
Show.
next budget?
Which one we doing?
Oh,
Medicare.
sorry.
Is it Medicare?
Yeah.
I hate to tell you, Julie, but OPEB isn't on your agenda, you know.
Oh. How do we miss that?
I don't know.
It just gets, I think it just gets sort of drafted in with group insurance.
Yeah, it's on the same page.
Okay, got it. All right, well, then we'll discuss that at a different date.
I'm ready to discuss it tonight if you want to.
I don't have it on the,
Oh, okay, okay.
oh, no, because we have group insurance, so
Yeah,
it's lumped
exactly.
in, so we can do that.
Yeah.
Okay. Sorry, okay. So we good to start with Medicare, Bob?
Yes, Ellen has that budget.
Oh, sorry. I don't know why I want to give you everything to you, Bob, sorry.
These are good budgets to be assigned. All the new members should be fighting to get, because while they're meaningful numbers, they are what they are, as Sue is about to tell you. Go ahead.
Department request of $1,061,995. And for right now, what I usually do with most of these budgets is I take FY21 actual and increase it by 10%. I will not know the real number until all salaries are actually inputted into Article 6. This is mandatory employer side of the Medicare tax of 1.45%.
All right. So to that end, I would make a recommendation that for the employer's Medicare budget be appropriated $1,061,995.
Okay, great. Does anyone have any questions about employers' Medicare? Okay, great. Thanks, Al. So next
Under
week,
group insurance, probably, right?
yeah, I mean, well, next I had general insurance on my list, but we could switch around to group if you want.
You get a little crazy with the insurances this evening.
So the Group Insurance Commission is for the health insurance for public employees.
Retirees.
And retirees, yes, right. And so again, Sue, do you do the same formula until that's all finalized? Right.
Yep. Right now I'm requesting $7,119,766, and that is FY21's actuals multiplied by 10%. We will not know the GIC rates until the first week in March. And at that point, what I do is I take the latest bill and actually dissect it on the number of people in each plan, multiply it out, add a migration number for new employees that might come aboard, and that will be our budget.
Mm-hmm.
This is like the last minute budget amount that we fill in.
So Sue, is this really just a placeholder in terms of the amount until that time? Okay, thank you.
Bob?
So
Last year, it seemed like we had some very good news on the GIC rates in that they were a lot lower than what we anticipated.
Well, yeah, we increased it by 10 and it was an average, I think, of 4 or 5.
Any indication that we may get similar good news this year?
Bob, I haven't even begun to look into GIC yet. Usually I get updates from our consultant, but I have not seen anything yet.
Okay. I think, Alan, you're probably in a position to make a recommendation.
So I make a recommendation that we appropriate for the group insurance line item, $7,119,766.
And Julie, should we go back to general insurance?
Wait, you're gonna do OPEB too?
Who had OPEB?
Kristen was gonna do OPEB.
Yep, I have that one.
OPEB was posted separately by the select board. They did discuss it tonight. I'll leave it to you, Julie, if you want to go ahead with it.
Well, generally it does, it can bring up discussion, and I don't have it detailed specifically, so I'm gonna put that off till next week. Kristen, sorry about that.
That's okay.
And so if we then go to general insurance, I actually wasn't sure whether that was under the benefits package or not, because in the warrant in Article 6, it's listed as unclassified. Which I'm, if we're considering it under benefits, I wonder why we do that. But in any event, I can go ahead with it. General insurance is basically for property and liability insurance. I know from Sue's presentation of the selectmen that she has a placeholder number of $1.1 million for this budget. One of the questions that came up at the select board was whether this was going to go out for bid this year. And that is apparently presently under consideration. And other than that, I will let Sue add anything that she wants to on general insurance.
All I can say is what I did is I took the premium that we paid this year and multiplied it by 10%. Usually it only goes up 5, but and the reason I do 10% is just as a placeholder, because we also have to pay for any deductibles and or settlements out of this account too.
Questions? If not, I would make a recommendation in the number recommended by Sue, which I am having difficulty reading.
1,114,464.
Thank you. You saved my ancient eyes. Okay, and then I think that brings us to unemployment, which is mine. This is another fairly simple and straightforward budget item. Again, it's in the category of those things that we have to pay. We do pay a consultant $1,900, and that consultant basically is doing all of the coordination with the state concerning the documentation and entries needed for unemployment benefits. And in the event that there is any hearing on unemployment, the consultant attends that. Otherwise, the amount budgeted for unemployment claims is $28,100. That is an amount that is subject to change. And the unemployment account has been a visitor to the reserve fund transfers in past years. So maybe this is one of those budgets that people can put an asterisk beside to see where we end up as the year goes on. And I think the only other question I asked was why was there a zero amount of actual expended for 2021? And Sue tells me that the 28-1 has been encumbered as the town sorts through a volume of fraudulent unemployment claims. Anything you want to add, Sue?
Actually, that's what I was going to say, but you summed it up nicely. Unemployment is we pay dollar for dollar. We aren't in the system. We don't pay a percentage of total salaries. And we don't lay off people. But there are times, there are loopholes in the unemployment system, shall we say. If a part-time person has another job and they get laid off from their other job, Hingham is accountable for some of their unemployment. I don't know if most of the new advisor wouldn't know this, but the crossing guards, they don't work in the summer or on vacation weeks. And they put in unemployment claims and we have to pay them because they are not part of the school system. They are part of the town. Other than that, we did have an awful lot of volume of fraudulent unemployment claims during COVID. And actually we're still getting them. People are hijacking and putting in claims for active employees that have not put in unemployment. So it has been a strain on a lot of employees because they think their privacy has been invaded. But we're working through that, and that's why I had to encumber the money. Any other questions?
So sorry, Sue, just to be clear, the fraud, the alleged fraud is not employees misrepresenting that they deserve it, but it's someone who's literally misrepresenting themselves as an employee.
Exactly.
Looking for, okay.
Exactly.
Geez, is that happening in other towns? I mean, did something get
Oh,
breached?
it's all
or
over
what's
the
going on?
country, all over
Okay.
the country. Yes, it has been one of the major scams that came out of COVID.
It's a pandemic.
It certainly is.
But do you need a social security number to apply for unemployment?
Yes.
So they're representing us an accurate social security number of an employee that's been
Yes.
discovered somewhere?
Yes.
Jeez.
Oldest trick in the book.
And it's not from here. I heard it was from one of, I don't know if it was one of the rating agencies that got hacked a couple of years ago. And all that data was stored for future use, and they found a future use.
Gotcha.
Too bad you can't just do like a blanket thing back to the state that says we didn't lay anybody off. So
Unfortunately, I can't because, like I said, if somebody had a part-time job, they got laid off during COVID, we
Got
would
it.
get charged for it. And some people wouldn't come back. You know, some of the rec kids and country club, when the country club was closed, I mean, those guys couldn't work, so they were on unemployment too.
Okay.
Hey, Sue, one last question, and probably not the time to go deep, but I'm just curious, if we had unemployment, if we weren't self-insuring the unemployment side, would we still be in a position to have to encumber some of this stuff, or would we be laying that risk off on the program itself that we had paid into?
I'm not sure because I've never dealt with it that way, but we would be paying an awful lot of money if we went into the pool because it's a percentage.
Okay.
It's a percentage of total salaries. So
yeah, so I mean, my question was going to be like, does this change anyone's opinion about how we do this? And the answer sounds like no.
It sounds like a really big no.
Okay.
Anyone else
Thank
have any questions about unemployment? All right, Bob, you want to give
I
a
don't see any,
recommendation?
so my recommendation would be that the operating budget for unemployment be funded at $30,000. And I think that then brings us to workers' compensation, which is also mine. This is again something that has to be paid. It's something that is quite variable. It's budgeted at $330,000. That money gets paid into a trust fund. And there have been reserve fund transfers, say in 2019 of 41,000, 2018 of 50,000, 2017 of 75,000, and 2016 of 150,000. So there is a third-party administrator that assists with this. I will note that the police and fire are under a different system for workers' compensation, so that injuries to police personnel and fire personnel, we would see in their budgets, because that's the way state law mandates it. And I know one thing that I raised with Sue was that quite often in the private sector, for workers' compensation, there is a risk hazard analysis that is done on a periodic basis. And I understand that Tom Mayo is going to up our efforts with respect to risk hazard analysis, with the idea that an ounce of prevention is worth a pound of cure. We do know that there was a serious injury this year to a DPW. Oh, I shouldn't say anything. Okay.
Exactly.
Thank you. All right. Can you put me on mute? I shall say nothing more, and Sue, you should amplify as necessary.
And not much else. We do have a legacy person on workers' comp. It is because it's a spouse of a worker that got killed on the job. She will be getting this legacy payment until she passes away. 330,000 usually is good. Last year, like Bob said, last year was one of the first years we didn't go for a reserve fund transfer. What we don't use stays in the trust for the purpose of next year to try to build up that fund balance. So we do not have to go for reserve fund transfers when we have a bad year. Right now, I think the 330 is okay. And we'll just keep an eye on it.
Other questions?
Sue answered my question about the what's not used stays in the trust. So
yes.
I don't see anything else. So my recommendation would be that the operating budget for workers' compensation be funded at a level of $330,000. And I think that brings us to the last budget that our award-winning town accountant is going to help us on, which is debt service. Clearly, these are all amounts that we are contractually obligated to pay. In the debt service budget, it includes both principal and interest for excluded debt as well as non-excluded debt. And the total principal that is being requested for FY23 is $4,184,460, and the total interest is $1,401,831. The non-excluded debt that I believe Sue explained earlier, or is $249,040. And there is a 15-year debt schedule that is included in the package that indicates that and correct my eyes again, Sue, if I can't read these small numbers. Anything we can do to get to 14-point type?
I don't have the 15-year schedule in my packet, so
I think we're at 5,586,508.
Yes,
is the total. And I will note that you may recall from our AdCom report annually in the warrant that there is a chart of debt service as a percentage of total annual expenditures. And for our financial policy, we're looking to have debt service in a range of 5 to 10% of TAE. And for FY23, we're actually falling a little below 5%. And of course, it's looking like FY23 is going to be a borrowing year. So the chart was likely to climb again. But right now we are in better than complete compliance with the financial policy. So you want to add anything?
Nope, you summarized it really very well.
You prepared me well.
It's just, you know, the non-excluded debt capacity. And the reason why we see zeros is, well, last year we wiped it out. But that will, if it falls to fund balance, we do reserve it in fund balance, so we can use it for future debt.
And I know it shows up on the forecast that I think you're going to talk about later tonight.
Yes.
So any questions? Seeing none, I would make a recommendation.
Wait. Someone have a question? All right, go ahead, Bob.
I would make a recommendation for the operating budget for debt service of $4,184,460 for principal, $1,401,831 for interest, and $249,040 for unused debt capacity.
All right, thank you, Bob. All right, so we are still waiting for the assessors and then for Michelle Monsegur to come over to our meeting for town meeting and legal. So we're gonna just put those aside for right now and come back to them when they are able to join us. So I'd like to go next on the agenda to the financial policy, if Bob doesn't mind talking again. We have on for tonight, I sent out to you a final draft, and I don't know if you want to go through the last little things or if anyone has any questions.
Let me update people from where we were when we left our last advisory committee meeting. So we went to the select board, George, Caitlin, and myself, and we gave them a presentation substantially identical to the presentation that we gave here. There was general agreement by the members of the select board with all of the changes that we had proposed, and I don't think there was anything other than general support. So Caitlin, George, and I then took all of the comments and proposed changes and put them into what we hope is a relatively final draft. I included with the draft that Julie circulated a comment that Caitlin made and language that she proposed for the preamble concerning the climate language that we had discussed. The climate language she proposed is broader than the net zero language that had preceded it. And I think Caitlin, George, and I feel that that is a good improvement. And I want to compliment Caitlin on hanging in there for her principal positions on on where the climate action language should be. And I think we have a better policy document because of that. And the only other thing that we kind of promised Tom Mayo that we would bring up to the advisory committee is that Tom had suggested something of more mandatory language concerning the expenditure of unassigned fund balance if it reached a certain cap. And, you know, as you're going to see, I think later tonight, when Sue presents the fund balance memo, the unassigned fund balance in the latest fund balance memo is slightly over 30%. The views that have been expressed, I think, among our little working group are, I think that number one, I don't know that the AdCom is in any kind of position within our bylaw structure to make any kind of mandatory recommendation. We don't generally propose warrant articles. I think the language that we have now gets it right. It leaves things flexible for us to make a recommendation to the select board concerning the use of unassigned fund balance once it is over 20%. And I think, for example, this year, when we have some big projects coming down the pike, where we know that it is highly likely that the Foster School is going to be a debt exclusion article in the annual town meeting, that I think it is likely whether the advisory committee formally recommends the use of fund balance over the 20% of TAE or not, that the select board is probably going to elect to do that. And I don't want to step on any toes over there or not, but it seems to me it's one of the reasons why these funds have accumulated. So why don't I stop talking now and let George and Caitlin weigh in on anything else you feel should be updated since we were last with our colleagues. And so take it away, George.
Thank you, Bob. I really don't have anything that I would like to add at this point to it. You know, we've had a lot of discussions amongst ourselves, and I've given, you know, a lot of consideration to some of the points that have been raised. And while I toyed with the idea of maybe putting some kind of a cap, just so that we don't build up a balance, I've come around to the way that you've described how we should deal with that balance. So I'm comfortable with the language that is in there right now. I think the language that Caitlin added is it makes it the document, the preamble, the additional language for climate control in the preamble very consistent with the language that's there. So I do endorse that and recognize Caitlin for that language also. So that's all I have.
Thank you both. Yeah, I didn't have anything else to add there as well. I think related to the cap, the way it's written, you know, suffices that the way I interpret is that we would look at that every year and determine whether it's related to a future kind of project or something that can be done within that year. So aligned with the language on that point. Thank you.
Questions?
Daveline?
Yeah, I was just going to say, because I think these communications didn't take place during the advisory committee meeting, but in other discussions. So the chair of the capital outlay committee has looked at these provisions and is very comfortable with the changes that related to the amounts. And we looked at actually what impact that would have in terms of what how many times we have in fact had things that were less than $5,000 or $10,000. So I think we're very comfortable with that. And I personally am very comfortable with how the climate action language has come out. So I thank Caitlin as well for that.
Thanks, Daveline. I did mean to mention, and just forgot to do so, that there was a lot of involvement with capital outlay, and that Eric and Daveline and the committee were supportive of the proposed changes.
Andy, you have your hand raised?
Yes, I just, I noted that near the end, it says the policy was adopted in 2018, I think it says. And the handbook for the advisory committee notes when updates are made. And I don't know if we have to go through that, but it might be worthwhile to note that while it was originally adopted in 2018, it has been amended through whatever date you should be put in there to show that this has been looked at and revised since 2018.
Yeah, I think Brenda and Tina have that in the one of the first pages of the revision history.
And I think these revisions that we're voting on tonight will be listed as adopted as of today's date, assuming that it passes, right?
But I think Andy's referring to, it says it.
On the last word,
June,
yeah.
Yeah, it says till June 19th.
Right. So, but I think we would change that, right?
Yeah.
Yes. And I think we generally list all the members of the advisory committee as well involved in the adoption. So yes, we would change the dates of the approval, assuming that it is approved.
And not to belabor the point, but if the reserve, it's not the reserve fund. What's the word I'm forgetting? The fund balance. If the fund balance, let's say, is $10 million over 20% this year. And I think that's probably correct, or at a minimum. What does the select board have any immediate plans to take $10 million and use it against one of the long-term debt items listed in the financial policy?
I don't think they have crossed that bridge yet as to how the funds would be used. I mean, we have several large dollar projects coming up. The most obvious one is Foster School. And they would have the opportunity of taking, I think it's closer to $11 million of unassigned fund balance and using that to reduce the overall cost of the debt exclusion.
Yeah, I think we'll start hearing about that more as we go through the warrant article process.
Thank you. That's all I have. Nice job.
Thank you.
Does anyone have any other questions or comments before we come to vote on the financial policy? Well, I want to thank Bob and George and Caitlin again for their really hard work on this all fall. It was a great collaborative process, and I really, really appreciate it. So thank you.
Thank you. They were great colleagues to work with. And at this point, I would like to make a motion to approve the revised financial policy to include the language proposed by Caitlin as circulated, and to otherwise update the dates of approval and review and the membership of the advisory committee involved in that approval. And that is the motion.
Second.
Okay, I'm going to take a roll call vote. Bob,
Aye.
George,
Aye.
Nancy,
Aye.
she's saying, okay. Dave.
Aye.
Evan,
Aye.
Andy,
Aye.
Daveline,
Aye.
Brenda,
Aye.
Kristen,
Aye.
Al,
Aye.
Tina,
Aye.
Matt,
Aye.
Caitlin,
Aye.
Sarah.
Aye.
All right, great job. I told Tom Mayo that I would find a way to shoot some fireworks into the sky to celebrate, but I didn't get around to it today. So we'll have to pass along the good word. Okay, well done. All right, so next on our agenda, we have the preliminary fiscal year 23 financial forecast. And I know that Tom Mayo and Michelle Monsegur want to come over to go over that with us, but they don't appear to be ready for us yet. So I think then, Sue, if you want, we could go in now just to go over through the fund balance memo. Does that sound okay?
We can. I didn't know if they wanted to be here for that too.
Oh, yeah, that's okay. Good point. All right, so we'll skip over those two. Sort of the yin and the yang report, because if you've taken a look through, one report is not great and the other report is great. So we will hear more about that. So then we'll go to liaison reports, please. George, do you want to start off with the Sustainable Budget Task Force?
Yeah, I can give a quick update, Julie. So the task force continues to meet on a weekly basis. They're continuing to look at possible sources of revenue as well as expenses and expense trends and that sort of thing. They are working diligently towards a end of January deadline. And the two things they've done is since we last met is they did a second update to the select board on their progress to date. And just this past week, they announced, and many of you probably got the email from the town, that there are going to be 2 virtual office meetings where the public can join in and ask questions or make comments and that sort of thing. So there is a way for people to make comments right now on the select board website. There's a link where people can make some comments. There have been some made, but really over the last few weeks, there really hasn't been any additional comments made. Perhaps the virtual meetings will elicit more of a response. And again, people may be waiting until some recommendations come out before they voice their comments. But the task force, as I said, they're working diligently. There's a lot of material to be covered, and they have covered a lot already. So kudos to them.
Okay, does anyone have any questions for George? All right, thank you. Dave, I'm not sure if you want to give an ACES report. There's not necessarily really any report, I think, but.
Yeah, no, we're still waiting on the school budget. I think the one thing I will point out for those who know him, apparently, I did confirm this, but John Ferris, who is the Director of Business Services, I may be getting his title wrong, but is basically the point person for the school budget. is retiring, has announced his retirement as of the end of June. So he'll see out the school year and then will be stepping down. So just a small, I guess it's not an editorial comment, it's a fact, but you can all draw your own conclusions. But the Hingham makes the Sustainable Budget Task Force made up of a temporary superintendent, a retiring business manager from the school department, and one school board member. And then Liz and Michelle and Donna Smallwood. So interesting. The challenge before us, I think we all on this call know what it is. And so we're going to get to be busy on it over the next few months. But that was a new development I didn't have on my bingo card.
So there's actually 2 school board members on that task force.
There are?
It's Nez Carenti and Carrie Nee.
Carrie's never been to a
Carrie's-
task force
Carrie's
meeting.
not on the.
She's not?
No,
Oh, good Lord. Okay.
no, it's just
All
nuts.
right.
Julie, I think she was initially at least mentioned as a member, but
That's
she
what I
is
thought.
not formally, no.
Okay. Sorry.
You're allowed one
Okay.
mistaken evening.
All right. Well, I guess I tried to make it a good one. Okay, so do we have anything on the Foster School Building Committee?
So I did attend the meeting last Wednesday night of the committee. Nothing, no events or changing timeline or direction or anything. It was a extensive, we'll say, discussion of sort of the focus of the meeting was on the structure and placement of the building itself. And they went through it about 6 or 7 different options to look at it, building size, shape, placement, and implications of all of them. Talking about, I mean, it was kind of fascinating actually in a lot of ways, talking about how the sun hits the building in terms of what it does for heating and sort of educational space, and how close it gets to the ledge there in the back, and in terms of what it does to the neighborhood, in terms of reducing the height of the hill, and how many truckloads of dirt would be every day for months. And it was involved and really kind of interesting in a way, but they had no actual decision on it yet. They just were going through the options and looking at the implications as part of the normal course.
So they have not been before the Conservation Commission in any formal capacity yet, right?
I don't think they did. No.
Okay.
Let's see if it says anything in there. I don't think so.
Does anyone have any comments or questions about Foster?
Yeah, let's get it going.
All right, thanks, Al. Nancy, do you have anything on the public safety facility?
I do. So they continue to work. There's a tremendous amount of work being done and people involved. Their design is advancing now to the formal design development phase, where they're refining the mechanical systems and the control requirements. They are also they've begun the meetings with the planning director and the building commissioner to review the schematics. They're referring to these as pre-permitting meetings. And the additional geotech work that's required on site is being scheduled. So a lot of good forward movement.
All right. And I don't think you have anything on CPC.
The only thing I'll say for CPC is I hope that everyone took the opportunity this weekend to enjoy one of the stellar CPC projects in town, which was the Hingham Historical Society tour, which was phenomenal and exceeded all expectations.
Yeah, I was kind of annoying walking around saying, oh, CPC paid for that and paid for that and paid for that. And look all we have now. This is wonderful.
I mean, if you could not have gone on that tour and not be blown away and how lucky we are as a town for the stewardship that is done. It was just mind blowing.
The property is being Hingham Historical, the Heritage Museum, and then the Lincoln House. And well, CPC has funded various projects over at the Old Ordinary property as well. So, Bob, you have a question or?
I actually had a question for Nancy on the public safety facility building as to, is it presently looking like that is not going to be on the warrant for the annual town meeting?
So the original schedule, that was going to be voted on as a special town meeting over the summer. I know that there's been discussion. I think there's, pros and cons in that discussion, but I don't think any decision has been made. I think, the committee has a lot on its plate, and it all needs to be done correctly.
Okay, thank you.
Okay, thanks, Nancy. Brenda, Climate Action Planning Committee.
I think everyone received the resolution coming out of the Climate Action Planning Committee to support the idea of a sustainability director for the town. Turns out that's the first of 3 documents that will eventually be coming everybody's way. I've gotten contacted in the last 24 hours by 2 different groups that wanted to find out how do they submit something to AdCom so anyway, you'll be getting more information once they get my instructions and they proceed to do so.
Did you give them the AdCom email address?
I will, yeah.
Because I got some documents sent to like one of my old personal email addresses, and I was like, oh my God, please just, yeah.
Yeah, I've got
So,
one. Will
thank
do.
you.
Okay. I haven't done these 2 yet, so I will do that.
Yeah.
I gather Liz Klein from the select board asked Hingham Net Zero to put together sort of the business case for a sustainability director. So that's one of the documents that will be coming your way. And Cleaner Greener Hingham has also voted in support of the sustainability director. So that's the other document that's coming your way. So.
Thank you. Nancy, you had a question?
Yes, so Brenda, and I am going to call you separately on this because there's so many groups involved and I kind of get lost in who's responsible for what. But if there's a warrant article, it would come out of this particular group.
I don't think there's a warrant article proposed. I think that Hingham Net Zero approached town administrator and I think some of the select boards asking that a sustainability director be put into the budget. They're waiting to see what happens with that. If that doesn't proceed, then Hingham Net Zero does intend to submit a citizen's petition.
Okay, so there's no warrant articles right now on the table. Nothing's being researched. It's just support of what was voted on last year. Okay, thank you.
No, support of creating a sustainability director position for the FY23.
What was suggested.
Yeah, so.
Yeah, okay, thank you.
Which is one of the reasons why we don't have a budget sheet yet for the select board, because however they, make a decision on that position, then it would be probably added to that budget request or additional request to that budget. So anyway, that's why it's sort of still out there, outstanding. Bob, did you have something?
No, you basically covered what I was going to observe, that the town administrator and the select board have to figure out where to put the position. So that it's probably will be an additional request for that budget.
Correct. But I don't know where that stands. I just know that's why that budget is still outstanding, because they're trying to figure that out right now. Okay, yeah. So Brenda, if you wouldn't mind passing along the AdCom's email address, that would be perfect. Thank you. Okay, Andy, you have an update for the planning board?
The planning board at its meeting on November 29th voted to submit 3 articles for inclusion in the warrant for the 22 annual town meeting. Each of the articles proposes an amendment to the zoning bylaw. They're the same 3 that we've mentioned before. The first would update the provisions concerning the floodplain protection overlay district to replace the existing floodplain maps with new maps issued by the Federal Emergency Management agency for the administration of the National Flood Insurance Program. This has been a work in progress for many years. And these maps determine for which properties mortgage lenders will require flood insurance and the insurance rates. The town must update its maps and corresponding language in the bylaw to remain in compliance with the town flood insurance, the National Flood Insurance Program. The second article would revise the zoning bylaw to make its language gender neutral and to change the phrase grandfathered to pre-existing use. It was pointed out that the phrase grandfather or grandfather clause originally referred to provisions adopted in southern states after the Civil War to disenfranchise African-American voters by requiring certain literacy tests or other significant qualifications for voters while exempting from such requirements those who were descendants of men eligible to vote before 1867. The Massachusetts Appeals Court in 2020 noted in one of its opinions that the racist origin of this term, and let it be known that it would no longer use this term. The third article is entitled Special Permits and Site Plan Review. This is an attempt to streamline the special permit and the site plan review processes. Right now, Hingham is somewhat anomalous in that we have 3 kinds of special permits, and the staff recommends that we deal with just one special permit without changing the authority designated in the zoning bylaw of any particular board. It also would clarify triggers for site plan review and modify, pardon me, the phrase limited site plan to allow for a limited site plan submission and review process for small projects. The planning board thinks that this amendment has sufficient merit to warrant inclusion in an article, but it thinks that there'll be quite a bit of discussion through public hearings with regard to exact language. And those are the 3 articles that the zoning board has submitted.
Okay, thank you. And then you have the tree preservation.
Yeah, the tree preservation study committee, you recall that Priya Howell and 9 others submitted a citizen petition for a proposed article in the warrant in the 2020 annual town meeting that would establish a bylaw for tree preservation and protection. AdCom recommended and the proponents agreed that the citizen petition results in no action, but that a study committee be appointed to consider the matter, speak to all interested parties, including town officials who have some responsibility for tree management, as well as the planning board. This proposal was approved by the annual town meeting. The select board appointed a 5-member study committee with Priya Howell as the chair. The enactment also specified that the study committee was to report the result of its review to the selectmen, to the select board, excuse me. And if the committee wishes to recommend a new tree preservation bylaw, to prepare such an article in time to present to the board, to the select board, to request inclusion in the 2020 annual town meeting. Pursuant to the town bylaws, an amendment to the zoning bylaw must be submitted by December 1st. No such report was submitted to the select board. However, on December 1st, a citizen petition was submitted by Priya Howell and 9 other citizens of the town. And the petition proposed an amendment to the zoning bylaw similar to that submitted in the previous year. I suggested that Priya talk to Tom Mayo to reconcile and determine with, maybe with the assistance of town council, the legal consequences of these actions and omissions. Without prejudging the matter, my assumption is that the citizen petition will be allowed to go forward, and we'll likely be dealing with that article that proposed in the citizen petition. But as I say, I'm awaiting word from higher authority.
All right.
That's the Tree Preservation Study Committee.
Thank you. Okay, so then that wraps up our liaison reports, and I see that Erin Walsh has joined us from the assessor's office. So thank you, Erin, for having a longer night than coming over to advisory committee. And if you're ready, then I'll go back to Caitlin, who can go over that budget.
Well, as Julie said, Erin is here, the Director of Assessing, to review her budget, the assessor's budget. The request for FY 2023 is $431,000, which is a $112,000 increase from FY 22, about 35%. The main drivers of that increase were about $19K in salary related to planned step increases, and also a full year impact of FY 22 hires. We had about $96,000 increase in the revaluation services line, and this is related to FY 23 being a recertification year. The DOR requires this every 5 years. Erin already has a RFP in process, and that increase is based off of an estimate of about $71K related to real estate and $25K related to personal property. There were 2 offsets to this to these increases, about $3K in consulting, which was related to the former director assessor providing consultant services as Erin was transitioning into the role last year. And then another offset about $400 for mapping services, which is now being done internally in the IT department. So Erin, do you wanna, I'll kick it over to you to go over some highlights of your department?
Sure. And am I? So I'm not able
to make you co-host. I'm sorry, Erin.
Oh, that's okay.
Hold on one second. There you go.
Okay, great. Unfortunately, I can't find.
Let me see if I can try to screen share again, Erin, while you're looking for that as well.
Okay, let's see.
Oh, you got it, Erin.
Oh, I got it. Okay, great. So I will just go over some of the highlights here. So this slide outlines our mission and services that we provide in the assessor's office. So our main function is to provide financial stability by fairly and equitably determining all real and personal property at its full and fair market value as of January 1st of each year for the purpose of taxation. Here it shows that we have just shy of 9,000 real property accounts with an assessed value of more than $8 billion and 388 personal property accounts valued at over $122 million. Our valuation this year went up about 5% from last year, our total assessed value. So obviously properties are selling for, or our values are going very, very high. So our key initiatives this year, one of our, I guess our best initiatives was the new senior means tested real estate exemption, which is to assist the senior population in Hingham who fall in a certain income bracket. So we're going to continue to promote this program. We didn't have a ton of participants because it was a brand new program, but we'll continue to promote by advertising in the senior newsletter and social media, as well as on Harbor Media. And the Senior Center will also promote the exemption in their January through April marketing strategies. So as Caitlin had mentioned, we're preparing for our fiscal 23 revaluation year. Every 5 years, the Department of Revenue requires that we conduct a year-long process where the DOR determines every phase of our assessing operation before they certify our values. And we're going to continue with our cyclical inspections to comply with the DOR guidelines, where we have to inspect every property every 10 years. Which brings us to our salaries and expenses, which Caitlin has explained in terms of our bump up in our reval because of our recertification year. Are there any questions?
Anyone have anything for Erin or Caitlin? Okay. So then Caitlin, we're ready for a recommendation from you.
I recommend assessor's budget for FY23 of $431,000, salaries of $285,852, expenses of $11,258, revaluation services of $133,790, and mapping services of $100, and that all of those added up equals the $431,000 that I mentioned initially.
Okay, great. Well, thank you, Erin. Thanks for joining us after the select board meeting, and now you get the night off.
Thank you very much. Good to see you all.
All right, thank you. All right, so I saw that Michelle Monsegur has joined us. Not sure. Oh, hi, Michelle.
Hello.
So, Michelle, we have two budgets to go through with you, if that's possible.
Sure.
The town meeting and legal.
Sure, no problem.
So I don't remember who has those budgets.
I have town meeting.
Okay.
Michelle, do you, as part of your slides, do you have the muni sheet for town meetings?
Sure, I can pull that up.
That'd be helpful.
Thank you.
Just get the right here. Can you guys see that okay?
Yeah, thanks very much.
Okay.
So basically, this is the budget for running our annual town meeting. This budget for FY23 is predicated on the idea that there will be a single town meeting that year in the spring of 2023 that will be held indoors, hopefully. So that's what these numbers are based on. Basically, the budget calls for a slight increase in salaries for the part-time checking in folks in order to bring them up to minimum wage. Custodian fees stay the same. So salary expenses of $2,903. Rental expenses, some have gone up, some have gone down, but for a total of $43,750. So a total budget of $46,653. Michelle, do you want to explain further about the town meeting budget?
Sure, I have I'll do it. Let me just go to the actual PowerPoint real quick. This is a one-slide presentation. I think Brenda captured most of the items. I did realize as I was doing this in the select board meeting that we had a line in here that talked about a special town meeting, but like she said, this is just a budget for one annual town meeting. If we do end up having a special town meeting in FY23, we would likely take those expenses out of the reserve fund and do a reserve fund transfer for that. I was asking the select board if the outdoor town meetings are more expensive than the indoor town meetings. As Brenda said, hopefully by the time we reach spring 2023, a year from this spring, that will sort of be back to normal. But there were some additional expenses in the outdoor meetings. For example, the audio services that we used around the field were just more extensive and a bit more expensive than what we normally do for indoors. We had other things like porta potties that would not normally be used for an indoor meeting, but I am proposing to bump up the equipment, the rental line here a little bit, because we anticipate when we return indoors being able to make the meetings a little bit more accessible. So we'd like to be able to provide screens with text on them and try to put a little bit more money in the budget to be able to make some of those changes. It's relatively straightforward. The households have increased from 9,600 to 10,300. So there's a little bit increase in postage there. And the town meeting services line that you see is for the stenographer. We moved that from the clerk's budget in the last year or two to put it in the town meeting budget because it was only for this event and it seemed like a better place to budget for it. Any questions?
Daveline?
I was trying to raise my hand and unmute myself. It was not a good. It's not good.
You did a great job of pantomiming. Oh, and then I missed Andy. I'm sorry. Andy's next. Daveline first.
So Michelle, I was just curious because I think the accessibility issues are really good. And I think you've brought that attention the last couple of years. Do we have any provision for providing large print warrant books if requested?
We could do that in-house, certainly, print extra copies there. But as long as we have enough advance notice, we could do it through the printer as well. So we'll have to figure out a mechanism for kind of getting that word out and having people try to give us a head count or make some requests to our office so we can prepare for that. I think we did offer that the last time, but sort of at the last minute and didn't receive requests. And we focused a bit more on the assisted listening devices for the last outdoor town meeting. But in speaking with, go ahead, sir.
I was going to say it just might be helpful. Maybe the senior center or the town's disability committee might be able to help with just the idea that it would be available.
Yes, and we did work with Diane DiNapoli last time on making some components of the last outdoor town meeting more accessible. In terms of the listening one is a key piece that everyone wanted to focus on. It's the reason that we're now using the live transcript feature in Zoom. And there was some thought of not wanting to target folks who do have hearing impairments and say, these devices are available for you. And when we return to indoor meetings, it's easier to have a screen with text that everyone in the meeting can see versus having an accessible section, et cetera. But we are working with Diane and the commission to try to figure out the best way to make that meeting in particular more accessible.
Right. I think it's a great effort. So.
Andy, did you have a question?
Well, I had an observation that when Brenda was reviewing the expenses, she said some of them went up and some of them went down. And I thought to myself, where have I heard that before? And then I saw my wife walk by in the background. And so I just want to note that that's a commonly used expression around here, Brenda.
Okay.
Specifically, equipment rental went up and advertising went down. So if we want to be specific.
You know I'm teasing you, of course. And my wife, who would just walk by again.
Okay, anybody else have a question for Michelle? All right, so Brenda, do you have a recommendation?
I do. For the FY23 town meeting budget, recommend the salaries of $2,903, expenses of $43,750 for a total of $46,653.
All right, great, thank you. And now the legal budget.
Michelle, could you put up the operating budget page, please?
Yes, I can. Grab
The request for legal services is $395,372, which is exactly what it was in the 22 revised budget. As you look at the numbers going, from right to left, you'll see some higher numbers in the 21 actuals. We have talked before about how the legal budget is quite variable and difficult to predict, and that we added 138,000 to the budget to bring it up to 80% of the prior 5-year average level of expenses, so that the end of the year trip to the reserve fund wouldn't be as difficult as in some previous years. But I would ask Michelle to put up her slide and explain what the legal services, generally speaking, are, and where the expenditures have gone.
Sure. Thank you, Andy. I think many of you know that we have 4 main attorneys who assist the town in the areas of general counsel, real estate, labor, and litigation. A lot of what we do with our general real estate and labor counsel is try to prevent things from getting to our litigation attorney. So that's where, because if you look at this pie chart, this shows you the breakdown of FY21 legal expenses, just percentage wise in terms of the areas where our legal budget was focused last year. Litigation and real estate tend to be the largest pieces of that. Anything that you see charged to the Ware River water system or COVID was reimbursed or will be reimbursed. It'll be a transfer to the Water Enterprise Fund, or anything that was COVID related, we submitted to the CARES, to Plymouth County through the CARES program for reimbursement that way. But like Andy said, some of this budget is hard to predict. We have tried to do some things to proactively reduce some of the reliance on legal counsel. So we've done monthly office hours, and we've reinstated those in person / via Zoom right now with our general counsel and our labor counsel. And so departments take advantage of that once a month and try to get ahead of certain items that come up. We have additional counsel that we rely on for specific areas like bond counsel and tax title guidance. But we did identify this as a structural deficit a number of years ago. In FY22, we requested and were able to get about $138,000 to bring this budget up to, at the time, what was 80% of the 5-year average. And that's why we're proposing to level fund it in FY23. I'd like to give that a chance to see how much we're able to cover. At this point in FY22, or about a third of a way into FY22, we were about 50% through the FY22 legal budget. So it still may be short, but one of the other things at play here too, Susan Murphy, our excellent real estate counsel, was part of the team that was helping provide coverage for the ZBA and the planning board after we lost all of the staff in our community planning department, and the staff in land use and development had sort of been straddling both departments, and with Susan's assistance, keeping everything going there for the permitting board. So I would expect, as we hire into some of those positions, that hopefully some of the reliance on real estate counsel and the dollars spent there go down. And same with just adding a new assistant town administrator for operations to our team here as well. There's more eyes on things in our office, so hopefully some of these costs change a bit.
And Michelle, I think you mentioned that a 10-year-old litigation matter had been wrapped up, so that should help.
Yes, and I assume it's all public knowledge, so I won't say too much about it, but.
Well, you don't have to go into the details. It's just a long-running case that has been a pain for many years. Has been resolved.
I told or Tom says he got an early birthday present, because basically a person, some of it must be public knowledge. I see Tom here now. A person who was illegally living in an affordable unit in Hingham for at least a decade finally left a few weeks ago, and our legal team had been working on that for a very long time. So we'll be able to reclaim that affordable unit for someone who actually should be living in it.
I see Dave's hand raised. Do you have a question?
I do. Hi, Michelle. How are you?
Hey, Dave, how are you?
I'm good. I got a quick question for you. Given the conversations at the task force around contract negotiations, both on the school side and then through the personnel committee, when I see Labor Council in that chart, is that representative of any legal advice that this, for example, the school committee basically has an attorney that helps them with their negotiations? Is that in this budget, or is that somewhere in another budget on the education side?
No, the Labor Council in this legal budget only represents Kevin Feely and the municipal, basically the municipal side of the labor guidance.
Okay, so the rest of that is all on the school budget in their lump sum
That's correct.
amount.
Yes.
And then just curious, is the majority of, well, do you have an idea what percentage of our labor council budget is for the purposes of renegotiating contracts versus just general labor issues? Just, I mean, order of magnitude. I don't need a real precise number.
I would say that it's mostly other labor issues, not necessarily the CBAs. The personnel board plays a huge role in negotiating those contracts with guidance from the select board. And while Kevin will review, we'll consult with him with some changes there, or review the final contracts, that's really not the bulk of what he does. But I would, if I go back to that side, our labor council is actually usually the smallest slice of the pie. It's really not that much at all.
Okay. That's what I was afraid of, because I just wondered if it was a little bit of a sine wave based on what was being renegotiated, but it sounds like that's not the case.
Not really. And we have 5 of the 6 municipal unions that were open this year. We're in the process of settling them. I think 3 of the 5 are now formally done, but you won't see a spike for that reason.
Got it. Thanks so much.
Tom, if you want to add
Anyone else have any
anything.
questions?
No.
Okay, then.
I recommend,
Andy, can I have a recommendation?
I'm sorry, I recommend an operating budget for the legal services for fiscal 23 of $395,372.
All right, great. Thank you.
Thank you.
So now we have Art Robert here and Tom Mayo have joined us as well. So we can now go into reviewing the preliminary fiscal year 23 financial forecast, if that works for you guys.
Want me to go? Julie, would you like me to start?
Yes, thank you.
So thank you, Julie. We just did this in the Board of Selectmen's meeting, select board meeting. I'm still getting used to the terminology. I apologize. I am making every effort at getting better at that. So the select board did just hear this. We had a forecast team meeting this morning. Julie and George, your erstwhile leaders, were in attendance. We had the chair of the board, Joe Fisher, as well as the chair and vice chair of the school committee, myself, Michelle, Gary Maestas, Dr. Maestas, the superintendent of the school department, was there, all present. That is in large part, that with the school building business manager makes up the forecast team. John was unable to attend, and Sue was there. Yes, thank you, Sue.
Thank you, Julie. He always.
I think he just like sees the chart and then you, and you're like the same thing.
Can I start over? I started with Board of Selectmen and then I forgot Sue. 2 strikes and I got 1 more. Okay, so we went through this morning with the team, so now it's appropriate to go through it with the Select Board and AdCom. As I think most of you are aware, this document is really a revenue forecast. That's what it's intended to be. We obviously do track the uses as best we can at any point in time, and as an attempt at identifying how far we are from a balanced budget, which is what we are legally obligated to take to town meeting. So given that, I'll go through the sources or the revenue side of the forecast first.
The levy line, if you draw your attention to the FY23, which is highlighted via the box outlining the column of FY23, the levy for projected levy for FY23 is a function, is a function of the prior year's levy plus the prior year's 2.5% increase plus the prior year's new growth. Those three numbers together build our projected levy for the current or the fiscal year that we're actively planning for. Then we add to that the projected 2.5% increase off of that number. And in addition, we generally at this stage in the game will plan for a $650,000 new growth figure. We add to that the $3.5 million of debt exclusions, and you end up with $95.7 million in total tax levy anticipated for FY23. From there, we have a series of other revenue available. Right now, we're anticipating or planning for a level fund in terms of state aid. I've been told that that is a minimum and that there is likely to be more this year. We don't know yet whether, in what form that will come, if it's going to be Chapter 90 money or, it could come in a number of forms, any addition. But I've been told that we can very comfortably anticipate a minimum of a level fund. As we know more, usually around the MMA conference at the end of January and then into early February, we'll start to get a clearer picture of what the state is likely, or what direction the state is likely to head. So that number will likely change and hopefully go up. We have our local receipts right now at $9.7 million. That's after a preliminary review that myself, Sue, and Michelle did last evening. That was right-sizing, right-sizing some of the lines that we had conservatively lowered during the pandemic year of last year, and now we feel it's appropriate to release or to lighten up some of those projections for FY23. But even then, you'll see as we get to that page, doing so, I think, fairly conservatively. But again, able to add about $500,000 to that line for local receipts. And again, that number will change as we know more. Things like excise tax numbers will come out in late January. And there'll be some fluidity there as we get to things like the investment income. We'll be able to fine tune that a little bit with help from capital markets advisors and the like. So local receipts that is a preliminary number. Well, they all are, but that one especially. Fund balance, this is the number you'll remember that we had plugged into this slot last year. This is our first of a 2-year attempt at weaning ourselves from the ARPA money that we had used or planned to use in the to balance the budget last year. So that is in there right now as an anticipated use of ARPA funds. The Sustainable Budgeting Task Force that Michelle can speak to in a little bit more detail is currently working on recommendations on what we might want to do. Frankly, and a lot of what they're talking about is what we might want to do in this column, or excuse me, in this line item. So they are working out those suggestions and details now. We hope to get reports from them in the next month or two. The next 3 items, the country club, the water system, and the sewer, are all enterprise funds. Those are, while they look here as nice, big, fat, juicy revenues, they're also equal and balanced on the uses side, so they become virtually irrelevant to the overall process. The light plant, we have an agreement with HMLP for a minimum of a $450,000, what's called a pilot agreement. That's a payment in lieu of taxes. Generally, we receive $500,000 from them or thereabouts. This is a function of their revenue received in any given year. This past year, that was down by almost 20 grand. We are anticipating that number coming back to what what we would normally expect, which is close to $500,000. Then we have the stabilization fund at 178.8. That is going to be that same number through approximately 2030. Sue can speak to that if there are questions on that. The excess overlay, still to be determined. I have to speak with the assessor's office, and we'll see what the need is as we move through the budget season. We'll see what the need here is, and that's one of the places where we might be able to release or to gain some relief. If you remember, we might be able to release as much as $400,000 or $500,000 out of this year, simply because we had allocated a fair amount of money to the senior means tested tax abatement program that was not heavily used in year one. So that money is now available for release potentially. Again, I'll speak with the assessor and then the Board of Assessors and determine what's the appropriate number there, but there'll likely be some relief there as well. And the Waterways Fund, this is brought down to zero because that money is now being earmarked for the dredging program that needs to be done once a decade. Any questions on revenues? Okay, jumping ahead to uses. Very early in the process for this. These are very preliminary numbers. These will change, some dramatically, others less so. The vast majority of this is Article 6 of this line of this section is Article 6. That is the annual budget. Right now, that is carrying a 3% cost of living adjustment for school employees, as well as any settled collective bargaining agreements. And those settled collective bargaining agreements as of today include the fire department, the library, and the DPW supervisors, which settled a year ago for 3 years, as well as we've also settled the police superiors, I believe. Is that right, Michelle? Am I missing any?
Oh, you're right.
So the rest of the collective bargaining agreements that are not yet settled, that's the police patrol and the DPW RNF contract. Those are, as well as all non-union personnel, are represented in the Article 4 and 5 number. And that number will go down and be transferred into the Article 6 number should those contracts, those CBAs get settled in the near future, which we would expect. That's the vast majority of the uses. We can talk a little bit about the more detailed if you'd like, but the big number that I think all of us have been anticipating and wondering what we were going to see is that $7.2 million deficit that's being projected right now. You'll remember last year, we collectively as a community agreed that it was appropriate to fund our annual operating budget with about $5 million of one-time money. A lot of that was anticipated as federal relief funds, which is exactly what happened in large part. Michelle and Sue can speak to the details around that as there are questions, but that leaves approximately $5 million of that $7.2 million is that pre-existing hole that we dug last year. So again, the Sustainable Budgeting Task Force is working on identifying, solutions to that problem. I'm a big, don't bring problem, bring solutions kind of guy. And the SBTF is absolutely working towards that goal. They are looking at additional sources of revenue, and they're looking at ways to control expenses going forward and creating a budget that in fact is sustainable. So I'm looking forward to getting some recommendations from there. Again, as Michelle reminds me regularly, there is not a magic wand that anyone will be waving over this number. We did this, I think, eyes wide open. We are, by the way, still looking at some significant relief dollars available to the community from the federal relief programs. And again, Michelle can speak to in more detail to those. And Michelle, maybe now is the right time to kind of jump in and talk a little bit about that.
About the federal infrastructure funds?
Yeah, about just about the 7.2 million whole in general, what your task force is doing and what you're seeing from what you're getting from what you anticipate from federal funds.
Sure. So on the federal funding piece, the Investment in Infrastructure or Infrastructure Investment and Jobs Act, the IIJA, was the one that was first passed. The ICMA did a webinar on that, outlining it for municipalities across the country. The funds that are coming through that program or programs are going to be available in FY 22 through 26. Unfortunately, it's not like the American Rescue Plan, where it doesn't look like we'll be getting a direct allocation of funds and then kind of told, here are the criteria or the categories under which you can spend it. It's more that they're going to funnel those funds through the states, through existing grant programs that we would have to apply for individually. And then they'll be creating 50+ new programs to funnel the additional funds through that. So I expect that all of that will take some time to set up. Usually a group like the MMA would go through and do some follow-up webinars and help us identify the different programs in Massachusetts that we should be looking at. Those funds focus a lot on transportation and on energy, water, sewer, a number of areas, but there's no just sort of broad municipal infrastructure building provisions in there. I asked specifically about town halls, DPWs, libraries. A lot of other people asked about public safety facilities, and they basically said, no, there's no federal dollars in this bill or others that would help you there. There's one USDA program for public safety facilities, but it's for communities that are smaller than 20,000 people in population. So that's tricky, but I think what we'll likely do is still track all those funds and look at trying to chip off pieces of these bigger capital projects that we might be able to access some funding for. So for example, there's a lot of clean energy funding in there for things like electric vehicle charging stations. To the extent that those might be in the public safety facility or foster school, could we use some of those dollars to offset those costs? So we'll try to look at it like that. But Tom's right. This number really shouldn't be a surprise to anyone. We did decide collectively as a town this past spring to put $5 million into the 22 budget that we knew we didn't have a recurring source of funds for. And our group, it's given our group an opportunity, and I think the town an opportunity to try to look at the problem, but also potential solutions and explore some potential non-tax revenue streams in a way that we might not otherwise been able to focus on. So we're trying to think creatively. I just said this in the select board meeting, and outside of the box. There's not going to be a magic solution. We're going to, if we choose to keep the level of services where we're at, or if we choose to add more, we're going to need to pay for it some way or another. I think our group will put forward different options for paying for it, different options potentially to live within the current revenues. An override will definitely be discussed, but we're still crunching a lot of data and trying to move towards discussion of strategies. One item that we have been pursuing, and Tom's made some headway on this, is the idea of this real estate transaction fee that several communities across Massachusetts have proposed and have pending legislation to do. Those communities, in addition to the general bill that's pending, all look at imposing a fee between 0.5% and 2% on real estate purchases. And earmarking it for affordable housing. We would like to pursue something similar, but maybe more generally for infrastructure in town. So that's one thing that has come out of the committee that we're looking into. But some of the other items you guys have probably heard from the updates include things like disposition of real estate, relooking at marijuana now that other communities are collecting some real revenue there. We've been talking to some of our benchmark communities about what are the big local receipts that they see, things like transfer station permits, parking meters, billboard rentals, school bus fees. A lot of those things may not be super popular here, but we're looking at everything that's on the table that way. I think the trickier part of the conversation is about expenditures, how to control them, how to remain competitive, in the municipal marketplace in terms of employees. And we're constantly grappling, or we're sort of hit with this question about our insurance, our health insurance package. But we're comparing different strategies for collective bargaining, trying to align things across the town, and we will see what options that we're able to come up with this winter.
Julie, that's what I have, unless you want me to go into more detail on anything, or we have Sue as well, and Michelle, whatever you'd like us to do.
Oh, Julie muted. I see Dave has a question.
I need to unmute myself, sorry. Yeah, go ahead, Dave, with your question, and we'll go with
Okay,
that.
just a quick one. Hi, Tom. I'm sorry, I must have just spaced it when you mentioned it, but could you tell me again what the implicit assumption is in this education line item here in 2023?
Sure, it's a 3% cost of living adjustment. So that's what we're doing across the board this year. What we had a negotiating strategy in past years on the town collective bargaining agreements that we would add a 2% cost of living adjustment. It says 2 here, that needs to be corrected to 3, and we'll make that tomorrow. But it's a 3% this year because the assumption in the past years had been we would add 2% to the cost of the COLA adjustments, and then an additional 1% elsewhere in contracts. What we're doing this year is adding all 3% directly into the cost of living to adjust our wage scales up. Every time we start negotiating, we have to do what we refer to as equity adjustments to bring us back to the midpoint of our 19 towns. It's very expensive on the years that hits, and we're hopeful that the 3% will do 2 things. One will stabilize that so we don't have to do those large equity adjustments every 3 years. And probably more importantly, it will help us in an ongoing way with our recruitment and retention, especially in our largest departments, police, fire, and DPW. We're finding that it's very difficult to retain and to recruit new employees in all 3 of those departments. So we're hopeful that this correction to that, or this new approach to collective bargaining will result in our ability to attract appropriate levels of employees or candidates.
Okay, so the math there is just a 3% bump on the salary and wages, and then 2% on other for ed. Sorry, I'm just focused on the ed side.
Yeah, for now, because John Ferris, we checked with him for updated numbers, and he wasn't ready to provide anything yet. So we just put that in as a placeholder.
Well,
and that'll be adjusted.
If they're 3 and 2, we're in great shape. But
yeah,
I'm not going to hold my breath on that.
Right. And John, like Michelle said, was working on that as we get new numbers. Again, this is an early version of the forecast. We'll be updating this as we go.
Yep, makes sense. Thanks.
Yep.
Does anyone have any other questions right now, or does anyone have any interest in looking at the detail on other revenue, the next page, or we could save it for the next time we go through the forecast? I see Andy with his hand raised.
Yeah. The question that Dave raised just made me wonder, Tom, to what extent does the town get involved, if at all, in the collective bargaining negotiations of the school department?
We don't. I will say that there's a much more open dialogue between the board of, the select board and the school committee this year than perhaps in prior years. And I think ideas are being exchanged in a free-flowing, productive way. So in that way, Andy, I think there's some input and some ability to inform and let everyone know what at least the thoughts are on the municipal side, but that doesn't, we're not in the room negotiating with them.
Thank you.
You're welcome.
And I'll add that for the advisory committee, I'm trying to get the personnel board to come before the advisory committee, perhaps in early January, where we can hear from that group about the most recently settled contracts in terms of the equity adjustment and the cost of living adjustment, different percentages, so that we can understand the impact on the budgets and salaries that we're going to be seeing for fiscal year 23 and beyond. So, anyone else have any questions? Okay.
And Michelle's always available for any of your phone calls.
Bob Curley said he's planting a money tree in his backyard for all of us.
I thought it was a different kind of tree. So, and for our newer members, you're going to see this forecast again and again, a couple more times this year and then in future years. So it's just something that you will get more proficient in understanding. And again, if you have any questions, the Select Board's office is always open for questions. Okay, so then so that's sort of like the dark side of the coin. And here now we're going to look at something maybe better news scenario in the fund balance memo.
I get the light.
Yeah.
I know it's late, and I'm really sorry that we're going to have more numbers to look at. But every year I present a fund balance memo to the town administrator, select board, and advisory committee on the status of fund balance as of June 30th. This general fund total general fund balance for fiscal year ending June 30th, 2021, or fiscal 21, is 47,796,707, compared to last fiscal year of FY20 of total fund balance of 42,189,077, and that's a $5.6 million increase. Total annual expenditures, and thank you, Bob and George and Caitlin, for passing this financial policy, because this would have to be revised because I used your actual formula. So the total annual expenditures for 2021 was $111,317,208. The percentage of unassigned fund balance to TAE is 30.85%. The amount of excess unassigned fund balance that's over 20% of TAE would be about $12 million. This chart shows all the different aspects of fund balance. There is no non-spendable. We've never had that. The restricted fund balance is now zero. It used to be $1.25 million for the sale of the Hersey House. As far as town meeting of 2021, we voted to use that for the public safety building. So that ended up getting taken out of restricted, and it is put into this assigned fund balance of subsequent years expenditures, which I will get back to in a minute. The committed fund balance is $4.7 million, which consists of the Stabilization Fund, special articles, which are articles from FY20 annual town meeting that has not been fully spent. So all the money that has not been spent on those articles are committed fund balance. The Lincoln School Apartments of $1 million, that was a article in 2016 that would let them borrow $1 million for their window projects, and we were taking it out of available reserves. The unused non-excluded debt, that is our unused non-excluded debt from the budget for the difference between a forecasted budget and what we actually spend on non-excluded debt. The delta is being committed into fund balance. As of June 30th, it was about $220,000, which brings the committed fund balance to 4.7. The assigned fund balance of 8.7 million comprised of the encumbrance account of $2 million and subsequent years expenditures of 6.8 million. The subsequent years' expenditures are this town meeting of 2021 of the Article 6 of about 5 million, and the Public Safety Committee, Public Safety Facility of 1.6 million. Everything else gets subtracted out of total fund balance to come up with the unassigned fund balance of a little more than 34 million. Does anybody have any questions on that part? Not seeing anybody. The change in fund balance of 5.6 million is attributed to three categories: the surplus of revenue of approximately 2.2 million, a budget surplus turnbacks of approximately 4.38 million, which I want to emphasize includes $2.9 million of receivables from federal COVID-related reimbursements. So if you take the 2.9 off the 4.38, it comes out to about $1.6 million, which is our normal turnback, which actually equals about 1.3% of total annual expenditures. So we are still budgeting at 98%, 98%, which I think is fantastic. And minus the use of fund balance of approximately $1 million. And that was Article 11 for the reserve fund, and the ambulance that we put into FY21's capital instead of 22. Julie, do you have a question? Okay. Does anybody have a question on that? The next two boxes are the total revenue, the surplus of revenue. And most of our revenue, there was slight increases in state aid and the tax levy, but the major increase in local receipts was from $1.49 million payback from the Ware River Water and $0.48 million in license and permit revenue. The total expenditures for budget surpluses, public safety and education lead the way. But like I said, this includes those receivables. So public safety had $1.3 million in receivables from FEMA. Education had a $1.3 million receivable from Plymouth County CARES Act. All the others, I lumped everything else into general government, which was $197,000 worth of receivables. All the others are pure budget turnbacks. Does anybody have any questions on anything that I just talked about?
Sue, can I ask you a quick one?
You can.
I'm just trying to get my head around this. Help me understand, if there were no waiting for the federal funds, we didn't have a receivable, but they just gave us the money as we requested.
Mm-hmm.
I'm just trying to see how the budget would look then. I mean, in essence, then all the dollars that we expended, which are now receivables, would have been, I don't know. Sorry, I'll talk to you offline. I got to kind of get my head around it because I'm just a little bit puzzled.
Okay.
Not puzzled. I'm just trying to get my head around it.
So basically, instead of cash,
Yep.
we just set up a receivable. So fund
But we
balance-
fronted the money. We fronted the money for the government, basically, right?
Yes. So basically, our fund balance went up, but it's part of the receivables. So when the money comes in, we will just hit the receivable and not fund balance. Fund balance is hit this year, not next year.
Right. Yep. All right. Yeah. I'm sorry. I'll keep thinking about it and let you know if I don't figure it out.
You got it. Believe me, it took me over a week to try to figure this out too. So I can understand. The next page is basically the ins and outs of fund balance. And all it does is tell you, we started off with this. Anything we took out of fund balance, we put back in, and then we take out anything we need. to come up with the ending fund balance amounts. I know I threw a lot of stuff at you, and I know it's late, so if you have any questions, I can answer them now. If you want to, think about it, and you can email me your questions later on, I'd be happy to answer them. One thing we do want to take away this $12 million, and I know Michelle and or Tom are going to say something about it. Typically, when we go to town meeting, we usually have about $2 million in either other articles or for the reserve fund. So that $12 million is really $10 million. Because we want to save money for any special articles that are in the next town meeting.
And snow and ice and legal and all the regular transfers. Yep.
Caitlin, you had a question?
Yeah, and I apologize, I can't figure out how to raise my hand. I'm a co-host. My question was around the encumbrance and the special articles that's previous years like approved activities. Does that ever not get spent, and do we review that and kind of take that encumbrance away? Or
well, encumbrances are every year. And what it is that June 30th, if a department has not received an invoice but has spent the money, they encumber their money to pay for that in the next year.
Okay, so there's never a situation where it's
no, if they don't use it,
but it's okay.
No, if they don't use it within that next year, it falls to fund balance.
Okay, gotcha. Thank you. That's helpful.
And same thing with the articles.
Okay.
Can I ask a question?
Sure.
I remember we had the ESSER money and the American Rescue money. It was like over $2 million, I think I remember. Where is that in here? And have we used that?
Well, the ESSER money and the APRA money is for FY22. This is FY21.
Okay.
Sue, can you speak to when we, in fiscal year 21, when we had committed, when COVID hit, committed to using up to a certain amount of fund balance if necessary to plug any revenue holes because of COVID, and then we didn't use all of that?
And that's why our fund balance went up $5.6 million. Basically, the 3 million or so that we used for Article 6, we didn't need to use it all. So basically we had to take it out of fund balance, and the 5.6 is the money we did not have to use, plus some money that revenue and turnbacks.
Got it. Thank you. Dave?
I assume I'm back.
Okay.
Quick question for you. Maybe this will help me get my head around it. Do we know a number that would be the amount of fund balance used in the FY21 budget net of the receivables? So in other words, when we add back the receivables of what was used in 21, what was the total hit to fund balance that was not covered by the receivables? So is that in here? Am I missing it, or is it okay?
No, it's not really distinguishable. Once we take it out of fund balance, it just becomes into the budget. I'd have to do a lot of research for that, Dave. I'm not sure I can figure that one out.
Well, can I ask you maybe an easier question? I mean, order of magnitude, is it a 6-figure number or a 7-figure number, you think?
I don't think it's 7.
Okay, that's what I thought. So it's, it's in the hundreds of thousands of dollars.
Yes.
So as a percent of fund balance, it's de minimis.
Oh, God, yeah.
Yeah, okay. That's good. That's what I was after. Thanks.
Anybody else have any questions? Tom or Michelle, did I miss anything that you want to bring up?
Nope, you even got the thing I was going to say. Actually, with one caveat that the $2 million Sue is referencing in annual, articles, transfers and such, That is, Sue actually did an exercise, got like a 20-year average. So that's not just a sense. She actually did a little bit of research on that, so.
All right, well, if anyone else has any follow-up questions, they can always contact Sue. I could also put it on the agenda for next week if people have any follow-up questions in our meeting for Sue. If people want. All right, well, thank you. Thank you all for your, well, thank you, Sue, for your hard work on this, because I know this is like, looks like just a sheet of paper. It's like a masterclass in accounting, right? Like a snapshot in time and trying to track everything. It's just, thank you. Okay, so we're done with most things on our agenda. We just have to hit some housekeeping items. So Tom and Michelle and Art, you can say good night.
Thank you all very much. By the way, I very much enjoyed being your van driver. Looking forward to doing such things again someday. We'll see you all.
All right.
Is that now on your resume, Tom?
It's my dream job now, Dave.
Actually, there's some, our HR told us there's some van driver openings, at the Elder Services Department. So you're all set.
I might very well be over there.
Javelin and I particularly enjoyed stopping in the parking lot and being told, to envision the public safety facility around us.
You got to get creative with these tours, Andy. So good night, everybody.
All right. Thank you. Good night.
Thanks, everyone. Bye-bye.
All right. Tom, just bear with me for just a couple more, 2 more minutes tops. But I wanted to thank you for getting through the first round of budget hearings. And I wanted to touch base with you about what we have planned for next week. And we're going to have budget hearings tonight, and we're going to continue through January 18th. And then pretty much things shift on the calendar into warrant article season, with the exception of we will not have decided the school budget by that point. But anyway, or capital outlay. So next week we have our second meeting of the month, second and final meeting of December, and the budgets are going to be DPW, landfill, recycling, sewer. Those are Randy's budgets, and he's going to be going out on medical leave. So we decided we need to push DPW up to next week. And then we're going to have town clerk, elections, Bear Cove Park, select board, conservation, reserve fund, health department, elder services, health imperatives, South Shore Women's Center, and then also we're going to put on OPEB. So hopefully we can get through all of that. And a final electronic file of all these budgets should be ready by the end of this week. And then budget books will get printed after that. So if anyone's changed their minds about budget books and decide they're happy with everything being all electronic, just let me know and I can update Sue's office. And so we've been sort of, because our files have been electronic and we don't have our budget books yet, if, and I can write this in an email for next week, but just, I forgot about the part about displaying the munis sheets on for our meetings so that everyone can see them at the same time. So that and the PowerPoint, we could ask department heads to display that as well. Andy, you have a question?
Do you have a sense of how many more budgets there will be after the 14th of December and when they will be heard?
Yeah, so I sketched out with Michelle, and I spent some time yesterday kind of making this sketch for the rest of the hearings. So I do have that, and I'm going to email that out to all of you. Again, it's all a draft. It all depends on whether we can, have the select board hear it first. And there are a couple of budgets that have some outstanding items, but basically we have a framework now. I just don't have a date yet for water company, but that will be sometime in January, obviously. So anyway, I will send that out to you guys probably tomorrow. but I just wanted to rattle off
Thank
what
you.
we're doing for next week because I know that people are busy trying to get meetings with department heads. Does anyone have any questions about the schedule or the budget hearings or any suggestions? Daveline?
I just want to say, I think it's, I don't know if we've ever thought about not meeting on Tuesday and meeting on Thursday, or maybe the select board thinking about meeting a different night. As we get into the more, what I'm going to call the more unusual or serious budgets, it's really useful to hear what goes on at the select board in our preparation, I think, to do a better job with our work. And it seems like we've gotten into this rhythm of where we're waiting on the select board to do something, and then we're going to talk about it. It seems to me we should maybe just think about for the future, not necessarily even this year, but if we had a system where we would have more time to review what they're doing. It sort of seems like since it's our job to really do the deep dive on the budget, it sort of feels like the cart is driving the horse. So maybe that's just my view, but you know, that's my view.
Well, thank you. I can certainly look around, check with others about the history of the Tuesday night. I think when we were all in person, I think the idea was, you know, department heads walking from the select board hearing, walking next door into our hearing afterwards. And I think that might have been the genesis of why we were always on the same night as the select
Well, and I
board.
understand that the select board used to not be quite as involved in the budget process many years ago. So, I don't know, but it just feels like, I guess part of it as volunteers, I sort of feel like our time should be as important as that of other people who might be being paid for their time. So.
All
So I
right.
guess I'm not as concerned about the convenience, maybe.
Okay. Duly noted. Thank you, Daveline. And Brenda, did you have something?
I can check with you later. Go ahead.
Okay. All right. Well, again, thank you, everybody. And we'll be back at it next Tuesday, and then we'll have some time off for the holidays and be back at it on January 4th. So any matters not anticipated within 48 hours of meeting? Hearing none. Could I have a motion to adjourn, please?
Motion to adjourn.
Second? Okay, roll call vote. Bob?
Aye.
George?
Aye.
Nancy?
Aye.
Saying aye. Okay. Dave?
Aye.
Evan? You're gonna say aye, Evan?
You're on mute.
Aye. Aye.
Yes.
Aye. Aye.
Andy?
Aye.
Daveline?
Aye.
Brenda?
Aye.
Kristen?
Aye.
Al?
Aye.
Tina?
Aye.
Matt?
Aye.
Caitlin?
Aye.
Sarah?
Aye.